Interest rates dropped about a half a point from where they were kind of stubbornly for about 3 weeks at 6.75%. Now they're, at one point this week, 6.125. Now it seems like they've sort of settled out at 6.25. We'll see where they go. And the big question is, how did this affect our real estate market? I'm Ron Milligan with RE/MAX Select here in Portland's Pearl District, and we'll get into the numbers right now. So the first one up is the average sale price. This was kind of interesting because last week, if you remember, the increase in the last 2 weeks, the increase in the average sale price was really nominal. Like 2 weeks ago, it was only 0.4% higher this year than it was roughly the same time period last year. Well, the average sale price jumped up considerably to $613,687. You see here, that's 7.7% higher than it was the previous week and about 5.3% higher than it was the same time last year. At the same time, the median increased also about $10,000, 1.7% versus last week, and that meant a difference between of about 1.9% versus the same time period last year. Last year, the median also went up almost at the same amount, same pace, so that's why that number didn't change too much. The number of homes sold, though, was really low. It came in at 365. That's down 20% versus where it was the previous week. And the thing that's really kind of telling about that is it's down about half of where we were roughly the same time period last year. I checked my notes for last year. That same week, it was 701 sales versus the 365 we saw this year. So definitely interest rates having a super strong chilling effect on the real estate market, which is kind of what the Fed wants the higher rates to do. And here we can see the results of that. The new pending deals they were up slightly, but pretty much flat versus the previous week. It was up 0.6% at 503. Last year at this time, the new pending deals, the new transactions that went under contract, almost, well, not quite double, 853 in my notes from last year. The average days on market was pretty much no change, 33 this week versus 33 last week. Last year at this time, the average days on market was only 26, but at least that's still holding steady right now. The thing that I thought was kind of interesting is I've been watching the number of pending deals, the total number of pending deals for the full metro area. That number has been decreasing relatively steadily for the last 12 weeks or so. Just been coming down, mainly because we don't have that many new deals going under contract. But for the first time in about 12 weeks, the number was flat. There's almost no change in the total number of pending. So we'll see if something comes of that, if maybe the market starts to turn around and move in the other direction. So of those homes that did sell, they sold at 96% of the original asking price, lower than we would like to see it in a normal year. Like I've said in the past, a normal year, you'd list a home, you'd hope that it would sell somewhere around 98% of the original asking price, and if it did, you felt like you were doing a good job as an agent. Here we're seeing that number slightly lower at 96%, and that is down from where we were the previous week. The number of canceled listings and the number of expired listings were both down just a bit, but kind of in that range that we've been seeing the last few weeks. And then the number of bank owns and pre-foreclosure distressed properties, 28 and 17, went up 1 from the previous week, so that's 45 out of a total. So that's 45 active, pending, and short sale pending. That's just about everything that's on the market that's distressed, compared to our total number of listings, which came in right now at around 8,000 listings, both pending and active. So last things up, doing this backwards this time, I know, is the inventory, the supply of active listings for buyers to purchase. Number came in at 5,304, which is down 1.8% versus the previous week. So of the last 3 weeks, 2 of those weeks have seen the number decrease. One of them was relatively flat in the last 3 weeks. So this may be the start of a new trend where we're not seeing as many new listings, and we're seeing some deals still go under contract and close. And I think some sellers getting a little bit frustrated and pulling their properties off the market to enter the rental market or wait until the market changes and sell at a time that's a little more advantageous to sellers. New listings I mentioned were down about 15% versus the previous week. That's 469. And after about 3 or 4 weeks of having more new listings this year than we did the same time last year, the number flipped again. Last year, we actually had a few more new listings than we had hit the market this year. Price reductions were also down about 16% versus the previous week. Fewer properties that are on the market, like we're seeing, and some sellers that I've been chatting with are just kind of digging in their heels and saying, hey, you know, if it doesn't sell at this price or close to this price, we're not going to sell and we're going to take the property off the market. So as I mentioned earlier, interest rates did fall a little bit. So they'd been stubbornly stuck at 6.75 for about 3 weeks. And that's the note rate with an APR probably around 7%. And now it seems like they've gotten down to, you know, at one point it was 6.125. For the last few days, the note rate has been around 6.25, so 6.25%. And the APR a little bit higher than that. But keep in mind that there are other products out there, like you can do a 5-year adjustable rate mortgage. So it's a mortgage, it'll be fixed for 5 years, and then after 5 years, it'll start to float or readjust based on what the interest rate is at that time. There's 7 years, and then of course there's the short-term rate buy down that we can often get sellers to pay for in this market. So, you know, 6.25 seems like a lot, but there are also other products out there that will get the rate down as well. So it's probably too early to say whether or not rates dropping this to you know, a half a point is going to have an effect on the market. We don't know that, and we probably won't know that for about 4 weeks or so. But what I can say from sort of a boots on the ground perspective, what my agents and I are experiencing is more buyers showing up. So we're starting to see more buyers come to us and starting their real estate search at a time when we typically don't see that. So it could be that there are some folks out there that are saying, hey, you know what, interest rates are high. You know, it's a little bit uncomfortable, but, you know, as I've mentioned in the past, it might be their opportunity, especially if we're talking about low down payment buyers or buyers who are using some of the first time home buyer programs like Oregon Bond or something similar to that, or some certain grant programs that we can find for our clients. And the conversations that I'm having with some of these buyers is that they're thinking, gosh, you know, what's going to happen if interest rates start to go down again, and we get rates down at 5% or maybe even a little bit under 5%, and we're now trading houses at last year's prices, 2021 prices, or maybe even 2020 prices, what's going to happen? And the expectation is, you know, we know demographically we've got a lot of buyers, especially millennials, that are sitting on the sidelines ready to buy, that have been pushed out of the market by the high interest rates. And if we get that convergence of lower prices plus lower interest rates, they're probably going to come flooding back to the market, and it's going to turn into a high competitive situation again, pushing those low down payment first time home buyers out of the market again. And some of these folks are coming in saying, gosh, you know, it might be a little bit painful for me to get under contract and purchase a home. Maybe the payment's going to be a little too high due to that interest rate. I might be able to negotiate a short-term interest rate buy down, so that maybe the first year or first couple of years that payment's going to be lower, less painful for me, but I will have beat the crowd back to the market. I'll have my property, and as rates go down, I'll be able to refinance out of the higher rate into a lower rate and be happy. And on top of that, as I've said before, there's all sorts of things back on the table. Negotiating over prices on the table, negotiating over seller paid closing costs, concessions are back on the table, home inspections are back on the table, appraisals are back on the table. We can negotiate over all of those things, and I don't have to give up all of those contingencies and bid way over the asking price in order to get a property, even though the rate is a little higher and a little more painful than it was last year at this time. So that's what I have for you this year. I hope you enjoyed the content. Love a thumbs up and a subscription if you haven't already subscribed. And if you know someone who would find this information useful, please feel free to share the video with them. I would love that. And thank you so much for watching us to the very end, and we'll see you next week.